All right, good morning. Good morning from the enterprise stage. This is pitch day at Bitcoin 2023. I like to think about this section as really the most competitive speaking slots to get. Hundreds of applicants every year. You really have to show your work to get on stage. So we're really excited about the quality of the competitors. Great groups of judges. We're kicking things off with the enterprise section. So to get right to it, we're starting with Fuji Labs. Great crew of competitors. We're going to go to our judges first to get a quick introduction from them. We'll start with you, Stella, if you want to give a quick intro of yourself.
Hello, everyone. I'm Stella from Foresight Venture. Actually, we are Asia Venture Capital. We have $400 million backed by Bigat. Bigat is a derivative exchange firm. Right now, it has the top 5 trading volume across the world. So we're actually covering a lot, Layer 1, Layer 2, and also ZK, SocialFi, GameFi. And in the last 1 year, we also grow to the top tier venture capital in Asia. Nowadays, we explore the market in BTC ecosystem. So that's all. Thank you.
Thanks, Stella. Christopher.
Hello there. Good morning. Christopher Gallicott, co-founder and managing director at Trammell Venture Partners. TVP is a historically deep tech with a strong Bitcoin emphasis company. But a few years ago, we leaned into Bitcoin, which has always been our North Star, backing founders, building on the Bitcoin protocol stack. And we've historically invested in companies like Kraken, Unchained Capital, Voltage, more recently Sonoda, and a lot of others, which we think will one day be household brands. Good to be here.
Thanks, Christopher. Nico.
Hey, I'm Nico Lechuga. I'm a co-founder and general partner of EgoDev Capital. EgoDev Capital is a venture capital fund that invests in software companies building on top of Bitcoin. We generally invest at the pre-seed and seed level. If you guys are building, we'd love to have a conversation.
Thanks, Brian.
Hey everybody, Brian Dixon. I'm the president with Off the Chain Capital. We are a deep discount value investor in the blockchain space. We have a heavy Bitcoin focus with the companies and assets that we own within the portfolio. And then I have a long venture background as well, as ran and managed a series of venture funds, funding about 140 businesses throughout the last decade.
Awesome. Marco, if you want to come on up and get things rolling. Fuji Labs.
Thank you so much. All right. How are you guys doing? Good. All right, let's do this. I'm Marco. I'm a CEO and co-founder at Fuji Labs. I'm honored to be today on this stage. Thank you, Bitcoin Magazine, for the opportunity. Love it. At Fuji Labs, we do believe Bitcoin is the best financial instrument humankind ever invented. But capital creation has not been solved yet. There is an untapped opportunity already, right, besides savings. We can see how just the lending market of digital assets is up 10 billion, market ready to be captured. Currently, the solution in the markets have a trade-off between capital efficiency and self-custody. Historically, banks work very, very well because they can pool funds together. But we do believe we don't want to introduce any other third parties, right? The Bitcoin way. So I'm very happy today to introduce what we are building is the Fuji app. So now imagine, on a button, you can lend on and borrow. On the other button, you can long or short, all with Bitcoin in a non-custodial way. Is this magic? No. It's 2 years and counting of research and development, building Fuji Money, which is a decentralized asset protocol that allow you to create a Bitcoin-backed stablecoin combined with a decentralized lending pool. This morning we went live and on Liquid Network, I didn't expect that. We put a cap of 5,000 Fuji USD that has been filled in 10 minutes. I didn't expect that, so I'm very happy. It means that definitely there is a interest in that. Will be soon compatible with RGB and Taro, or I should say TAP, to exploit Lightning Network as a payment rail. Let me tell you why I do think this is beneficial for Bitcoin. First, it increased the demand of Bitcoin as a collateral for loans. Second, it enabled credit creation on a Bitcoin standard. And the byproduct of these two components enable you to have a Bitcoin-backed, over-collateralized stablecoin, finally, without having banks in any point of the stack, just Bitcoin. So, okay, this is definitely cool, I would say, but is this a viable business? Is there a demand? I do think that just as a 2021, we can see how just looking at the Bitcoin-only lending market, we can assume that we can, thanks to our innovation, combining capital-efficient and self-custodial solution, we can definitely aim to capture a 10% of this market. Let me show the unit of accounts, the unit of our economics. And I do think that just taking an average of 10% of interest rate on Bitcoin-backed loans, we can charge a 20% fee on interest earned by lenders on our pool on top of the protocol. And we do think this can be very profitable very quickly. Now, the competition is pretty huge already. I think you guys know very well all these players already in the space. I only want to focus on the Bitcoin-based column there. Anything built on Bitcoin, just taking into account US and most of Western jurisdiction, has total legal clarity. And anything built on top of it inherits the same legal clarity. I will not build anything on other blockchain right now, to be honest. I will not be, comfortable in building financial services for the future in other ecosystem. We have a stellar team. We do believe we can execute on our vision. We have experienced, me as a co-founder and my partner in crime, in go from idea to the market. But let me tell you, we have the best legal team out there in terms of stablecoin regulation in the US and in general for the crypto asset markets. We have one of the two advisors, which I think, Andrew, from the technical leader for BTC Pay Server, bringing us all the experience in non-custodial payment processor, and Samson Mo, who I think doesn't need any introduction. Fuji started a long time ago, but I do think now is the right moment to execute on our vision, to launch our app, to prepare for the next halving, and foster the next wave of Bitcoin adoption. I do thank you for your attention. I'm looking forward to join us as a partner in our journey. Ciao.
Don't go away.
Okay, there is a question. Okay, cool.
Please come back. We have questions.
Right.
So
that's the important part.
We've made a few investments in credit. Huge believer, I think a non-rehypothetic approach is the only sustainable path. What I feel like I'm missing and I didn't understand is, are you building a marketplace for lending where if I'm a provider of dollars, I can do that, or you're just making the market? Are you going to have lending capital yourself that you're, how does this work overall? And I didn't understand the 20% fee. So is that 20% of the interest that a lender would charge? Yep. Could you just walk us through how this works?
I didn't want to go very technical or in detail.
It is a little technical.
Because it can be.
I think it's important.
No, important, but I didn't want to go very deeper. I do think that the first concept to understand is like we released this Fuji Money protocol, which has no protocol fee, so we cannot defend the protocol, but that's very important because it puts us in a position to not be a lender, because the protocol is autonomous. That's our goal. So the idea is that on top of that, we can run lending pools, meaning that, of course, other people, other companies on the same protocol can compete with us. So definitely it's not like defensible in the terms that we are the only one, but I do think that this is the new model in a way where basically, we don't need any more banks in any part of the stacks and any trusted third party. And I do think we are in a good position to be the first mover first, because we created the protocol, and to defend ourselves, both with branding and also with the capabilities to attract a new type of liquidity from lenders that maybe cannot do in the current regulated market or in other ways. I think it was 2 questions, or no, it was just that.
I was just looking for some.
So.
Could you walk us through a use case? Like, I'm a customer onboarding to your platform, just to paint a better picture for us in the audience. Like, I'm signing up for Fuji. Walk us through the model.
Yeah, I think that the Fuji app especially is a non-custodial wallet. So meaning that you are not signing up, but you are like creating your own wallet, which is a normal Bitcoin wallet with Lightning support and etc. The idea is that you connect directly and you interact directly with your protocol in any of these like Bitcoin layers, from Liquid to Taro, et cetera, et cetera. And the idea is that if you are a borrower, you're locking down your Bitcoin on any of these, I would say, smart contract layers. Once you do that, you over-collateralize, so you can get, let's say you collateralize a 200% collateral ratio, so you can get like 100% of Fuji USD in this case, which is the first synthetic asset we are launching. As long as you keep enough collateral, right, the value of your Bitcoin collateral doesn't go below underwater. If that happens, automatically liquidation will happen. So this will keep the supply of the synthetic asset and the collateral in sync. At the same time, you can definitely spend, trade, buy more Bitcoin if you want, go long. So that's the other use case. Or if you want to avoid capital gain taxes, for example, in some jurisdictions still, you need to, when you spend Bitcoin, you need to pay them. You can open a line of credit and spend them. This is from the borrower side. On the lender side, the idea is that you're providing liquidity either in Bitcoin or potentially in any other stablecoin that can be issued, like centralized one, maybe. But the idea is that just lending Bitcoin, you can get an interest rate, because to keep you open your contract, you need to pay a recurrent minting fee, right? So the lender is basically charging directly this way the borrower. The idea is that it's not a P2P model. Basically, we avoid the double coincidence of wants, right? So we don't need to wait for finding the borrower and maybe ask him, hey, you want to close because I want to pull out my funds. But being pooled together, the idea is that you can exit anytime. Of course, you will stop earning interest. And the idea is that we will run a pool on top of it. Okay, so that will be, and everybody can run a pool, of course. So that's the point of not being captured, to not capture the protocol, right? So to keep it open. So the idea will be that we will charge the lender for the infrastructure we are running, so from the liquidation and the mobile apps and all the, I will say, the job of finding user and giving them a nice user experience for the borrower and the lender to do that.
Is Fuji dictating the lending rate, the interest rate on that, and then are you dictating the collateralization rate, and you're just bridging the gap between the two of them? Can you walk me through that a little bit?
This is still work in progress, since we are trying to understand. We launched today, so we want to understand with on-chain data and see how it goes. But the idea is that to link all these parameters, like for example the interest rate, dynamically to quantitative data. For example, how much lending there is on their side in terms of Bitcoin, because most of the user will go long on their Bitcoin. So you need to find enough short, in so to speak, liquidity on the other side. Plus, you can check all the redemption happening in the past. So you can use that data to increase or decrease in terms of incentivizing or disincentivizing new issuance, like new inflation of the synthetic asset.
talk to us a little bit about fundraising. So how much money do you think you will need to raise in order to get to where you're going? And help us understand from like a dilution standpoint, what's the end game? Is this an acquisition? What do you want to do from a future perspective?
We are currently in a pre-seed stage, so we are not reach product market fit. We are looking for a 10 million cap and raising $500,000 at the moment to reach the next stage. Our idea is literally, to be honest, to try to literally to compete, at least in the crypto lending sphere. So our current idea is to be dominant in that space at the moment. So we're not looking Fuji Labs as the company that is building the tooling, the mobile apps, and the infrastructure on top of the protocol. The idea is to be present and to create our own position.
Thank you.
Thank you.
Thank you.
Thanks, Marco. Good stuff. Next up, we have Alan Long from SQL. All right, Alan.
Clicker. So researchers have estimated that roughly 20% of the Bitcoin supply has been irreversibly lost already. Users, when they get into this space, they have a dizzying array of choices that they have to make. They have to choose which wallets they're going to use, which chains they're going to operate on, which exchanges that they're going to use. All of those things create a very fractured experience for a user. So where do they turn? They turn to centralized exchanges because exchanges are easy, they're relatively secure, but we all know the cost of custody. So we built a crypto command center. We built SQL. SQL enables people to own, manage, recover, and inherit their self-custodied assets through a very simple and easy-to-use UI. So we actually have developed the blueprint for the secure recovery and inheritance of self-custodied assets. And the law firms that we've actually partnered with have privately said to me that they feel this is almost a 0-to-1 moment for the estate planning industry because they really didn't have ways to actually recover and manage these assets for their clients. We also have implemented a cutting-edge encryption protocol that powers all of this. So while our competitors are focused on the analog approaches that they've historically taken, we have built a digital solution to the digital problem of secure key management. All of this is powered by something called Opaque. So the defining feature of Opaque is your passwords never leave your device. The encryption keys derived from your passwords never leave your device. We can't see any of the insecure plain text things that you actually use on your device in any manner. For the social recovery component, we can never see the seeds that you use, private keys that you use. Your contacts never get any private keys, seed phrases, or anything. So unlike the social recovery approach of a competitor that launched roughly 2 days ago, there's no sharing of seeds in an encrypted, sharded state at all. We have a completely different social recovery model. So while Alice can manage all of her wallets through SQL using Opaque, she can also leverage Bob, Carol, and Dave to help her recover all of her assets if she ever lost access to them. And we can do this all without needing KYC. So these are some pretty bold claims. I want to actually let you watch a demo if it'll pull up. Guess it's not going to pull up. If you want to see the demo, please come to booth 342 after this. Happy to show it to you, happy to walk through in very deep detail exactly how we do all of this. So the key component of what SQL is, private key management combined with social recovery using your own trusted contacts, not a third-party company that you don't get any choice in actually where it goes. Ours is a completely different implementation. And we have also built the inheritance of self-custody assets. So we do that through a 2-tier system. We actually require off-chain proof of death. That's the first step. So once we get proof of death via a notarized death certificate, your social contacts that you're actually used for the social recovery piece have to also agree to move forward with the process. So it's not really possible in isolation to run this process. You have to get the buy-in from your own trusted contacts. And all of this is powered via Opaque. Opaque was launched in 2019 from 3 cryptographers, I think UCLA, University of Oregon, and I don't remember the third. But we are one of 2 commercial implementations of Opaque in the world, WhatsApp being the other one. And if you're wondering about the viability of Opaque, Cloudflare has actually written articles arguing that they want to replace TLS with Opaque. So this is how we see ourselves positioned in the industry. On one hand, you have Ledger, and Ledger is a retail darling. Everyone in here probably has one of their thumb drives, but it's easily lost, it's cumbersome, you have unsecured seeds that you still have to do something with, and they just launched a very limited social recovery functionality. On the other side, you have Fireblocks. The problem with Fireblocks is it starts at $20,000. It has a very institutional focus for its feature set, and they really won't work with you unless you sign an enterprise contract to actually use it. We want to take that consumer orientation and the powerful security of Fireblocks and bring it to the masses. So the market for our self-custody command center is massive, and it's ever growing as the industry grows. With our customer acquisition cost, we believe that by going after Ledger and other hardware wallet users, we can get to 16,000 users by the end of the year. Around Q1 of 2024, we estimate that our Groups product will be done, Groups being an institutional enterprise-focused product, at which point, in combination with going after individual accounts, we are planning on having roughly 350,000 accounts on the platform and having the scale to support that. So where are we at today? We're calling for people to invest. We would love to talk to any angel or fund that is interested in this or in this industry, and we want to show you what we've built. We think it's groundbreaking, and we would love to actually talk with you. We would love if you hit that QR code and actually test out the application. Come and talk to us. Tell us what you like about it, what you don't like about it. We're here to hear your feedback. So we're located at booth 342. And I'd love to talk to every single one of you after this. I can go into excruciating detail if you need me to. I'm the primary technical resource who built this, so any of the questions you might have, I should be able to answer. Thank you.
Hello, just wonder if you have the social common part, the customer common part, so how it's work, and also how it can improve the experience for the users.
Yeah, so just to make sure I heard correctly, you're asking about the social recovery, how it works?
Yeah.
So I'll first just position this against the Ledger implementation. So the Ledger implementation, for example, takes the pre-BIP39 seed phrase, shards it, encrypts it, and sends it to 3 different companies, themselves included. And they require KYC to actually move forward with the process to recover this. That works for that one wallet. Ours is any number of wallets that you use on our platform on any chain that we actually support. And it actually works on any chain, but if you want the deep integration, we have 12 chains deeply integrated. So from there, we have something that we call a contact token that gets generated. And this is honestly a really complex thing. I'd be happy to show you our diagrams of how it works. But the contact token is essentially, it encrypts the user key that we derive from your master password, and the user key in combination with a series of other keys, some held by SQL, some held by the user, that actually combines with the contact token that your trusted contacts have to actually help you recover access to all of the wallets secured on SQL.
On the estate planning side of what you were noting, you said you partnered with different law firms, right?
Yes.
For this? Okay. So have you built like a digital skin that goes over a trust mechanism from a legal standpoint, and then that's how you pass it off? Or have you actually developed a way to integrate the legal components of the trust into the digital interface so assets that are inside of that have the same legal treatment as a trust?
The latter.
Okay.
Yeah.
So
It's extremely legally flexible. So that was one of our main concerns when we built this. Not only does it have a very technical solution to the actual problem, but anytime you deal with end-of-life experiences, you're going to run into real-world issues at the law system, right? So we consulted with, frankly, a number of lawyers, some of them being crypto-native people, who are in the estate planning industry, and we talked through how do we best tackle this problem. So that's been a concern of ours since the beginning of this, is how do we marry the technical solution with the legal solution. And what we came to is, from their consultation, is probably the most legally flexible approach that we could have taken.
Thanks, Alan. That was Sequel. Next up, we've got Matthew Black with Atomic Finance.
Awesome. Can everyone hear me at the back there? We got some thumbs up, looking good. All right. So, are we getting the slides up here? Any minute here? Oh, it's up there. Perfect. All right. Hey, how's it going, everybody? My name's Matt from Atomic Finance, and today I'm going to be talking about sound finance. But first, I want to ask all of you a question. When I say 8% APY on your Bitcoin, what comes to mind? Maybe you're thinking of BlockFi. Maybe you're thinking of Celsius. Maybe you're thinking of bankruptcy. You're probably thinking red flags. Why is it that the most prominent consumer financial apps for Bitcoin died seemingly overnight? Because they weren't built on sound principles. Their business was built on taking custody of your Bitcoin, rehypothecating it, lending it out to someone else who lends it out to someone else, and giving you no transparency on how the yield is actually being created. The reality is there's no free lunch in Bitcoin. It's 8% you'll never enjoy on Bitcoin you'll never see again. The reality is there's no lender of last resort in Bitcoin. If you're giving your Bitcoin to someone for them to lend it out to someone else, uncollateralized, you're playing a dangerous game, my friend. So we had to ask ourselves, there has to be a better way. Why isn't there a way to earn a return on your Bitcoin without having to deposit it and give custody to a third party? Or just put it into a black box? What if there was a product that allowed for you to make a return in a transparent manner? That's why we built Atomic Finance, with a mission of building sound finance for sound money. Because we believe that Bitcoin finance should be better than the status quo. Because we believe that Bitcoin finance should be better than a carbon copy of traditional finance. Because we believe that financial tools for Bitcoin should be no-nonsense, transparent, and as self-sovereign as Bitcoin itself. So how do we do it? We allow folks to invest in an automated trading strategy. They set and forget 1 month at a time. And we provide transparency of exactly where their funds are at all times. We allow folks a way to make a passive and long-term investment and a way to grow their Bitcoin nest egg. And the best part is it's non-custodial. So the user never has to give their sats to us. So how does it work? The user goes and installs the app and selects a strategy. The strategy we offer right now is the cover call strategy, which has been back-tested historically for 8.14% APY. Obviously, past back-testing does not predict future returns. And of course, the user sets up their non-custodial wallet. And finally, they deposit their Bitcoin. How is this working under the hood? We use discrete log contracts, which in layman terms is like a smart contract on layer 1 Bitcoin with no nonsense. The user locks their Bitcoin in a month-long DLC. And at the end of the month, the Oracle creates an attestation, which then, of course, allows for the Bitcoin to return from the DLC back into the user's self-custodial wallet. Our business model is simple. We take a spread on the premiums of each position taken in the strategy. So we launched our cover call strategy in just February of this year. And since then, we've grown from 7 Bitcoin locked to, as of today, over 25 Bitcoin locked in the strategy. That's over $660,000 USD. This is the most that's ever been locked in DLCs, and we're just getting started. So what do our users say about us? Lal Pratt, founder of Vida, and one of our longtime users and supporters, said, I like Atomic Finance because it's transparent about the risk. It allows you to draw a box around the risk you're taking. Other interest products are black boxes that expose you to unknowable risk. Oh. Joe Burnett, head of the Blockware Intelligence podcast and also one of our longtime users, said, after what happened with BlockFi, FTX, and Celsius in 2022, we've been reminded that counterparty risk in Bitcoin is as important as ever. I love that Atomic Finance uses native Bitcoin tech to build a product that is nearly trustless and eliminates counterparty risk. It's one of my favorite Bitcoin products, and I'm excited about the future of sound finance. So what's next for us? Over the next 12 months, we're going to be focused on adding additional strategies for users to choose from for various market cycles. We started with cover calls, but we have plans to add strategies around long calls, long puts, short puts, etc. We're also going to be focusing on improved securities. What we've heard from a lot of our larger Bitcoin holders is that security is really important to them. That's something they really care about. They care about if they're going to get wrench attacked. And so we're going to be focused on improving the security features within the app, like adding 2FA and whitelisted addresses. And also, we're going to be focused on growing our initial segment in the North American market, which we feel that we're well positioned to do. So what's our longer-term vision? For us, it's to become the gateway to sound finance, a one-stop shop for non-custodial Bitcoin finance. For example, adding options to hedge price downside. Imagine you're in a bull market, and you could hedge your price downside. Why hold the bag all the way down and incur significant capital gains? For the traders out there, perpetuals for speculation without counterparty risk. And finally, we know that all Bitcoiners aren't English speaking. And so expanding globally down the line is something that we want to focus on by adding additional languages into the app and making it even more accessible to more folks. So to sum it all up, we believe that Bitcoin will become the world reserve currency, that it has the potential to become the most important settlement layer in human history. But Bitcoin can be used for good as much as it can be used for evil. So I ask you, which way, modern man or woman? Will Bitcoin be reserved for custodial exchanges that can rug pull at any moment? Or will Bitcoin get the sound finance layer it deserves? So let's build sound finance for sound money, because Bitcoin deserves better. Be sure to check out our app. It's available now on TestFlight iOS. And thank you very much.
Hey, Matt, really appreciate the presentation. Can you walk me through who's building out the trading strategies on your team and their background?
Yeah, absolutely. So we've got myself and my co-founder. We both met in university, about University of Waterloo 7 years ago. So myself and him both took business and computer science there with a bit of background on the finance side. But we do lean a lot on our advisors. For example, our finance advisor who is a professional options trader, as well as has a fund focused on Bitcoin options trading. And so with his help, along with our quant advisor as well, we built out a suite of backtesting tools for Bitcoin. There previously wasn't possible to do Bitcoin options backtesting, so we had to build that entire suite out. And then throughout the process, we took the very careful measures to make sure that, building a strategy like this, 99% of the hypotheses that you have don't work and are overfit. And so we took very careful steps to make sure that we worked with them to build out a comprehensive strategy that obviously is not overfit and that users can invest in. Yeah.
Two questions. First is, with about 25 BTC capacity currently, is there an impediment, or is there a scaled plan for growth? I'm not sure what the market demand is, but I would imagine it's a lot more than that. Second question is, what's the path between now and getting a perp swap launched?
Yeah, that's a great question. So the number one question is, how are we going to grow from here? Our main focus there, obviously, as I mentioned in the slides, is to focus on the North American market. So putting those features in place and doing some turbo boosts for growth that get us in front of more folks, especially in North America. And also just working on refining the product. Users that come for the first time sometimes drop off. And so how can we get those users coming back again and again to eventually invest in the product? We're going to be adding in like a watch list as well. So folks that maybe aren't ready to invest right now are able to subscribe to exactly what the positions are, so they can get a good sense of what's happening. And sorry, your second question? what's the plan for a full launch? Yeah, for us right now, we're not really constrained from going from, so right now we're in like an open beta, so anyone can download it on test flight. I think, when we reach, a couple hundred or 1,000 Bitcoin, depending on like really the user constraints around test flight, that's when we'll look to actually do a full launch on the App Store. But right now there's no kind of pressing concern for that.
It was specifically about perpetual swaps. That product, I think, solves your first point about maintaining stickiness of customers.
Oh, sorry. What does perpetual swaps have to do with the other part?
When will you launch one?
Oh, when will we launch perpetual swaps? Yeah, I think that's like way down the line. That's not something we're focused on right now. Right now, what we're focused on is just growing the amount locked in our current strategies, adding additional strategies. That's something we might look into maybe next year. Yeah. Perfect. Thank you. Thank you very much.
Thanks, Matthew. Way to bring it. Next up, we've got Murat from Ordinal Safe. Pretty timely topic to be attacking, so excited for this one. All right.
Hey everyone, it's Esat with my business partner Murat here. Today we are here to talk about our vision for Ordinals and our vision for Ordinal Safe. Ordinal Safe is a Bitcoin extension wallet specifically designed and built for Ordinals. And we think Ordinals is one of the most exciting things that ever happened on Bitcoin. So, can I have that? So maybe I should start with, what are Ordinals? Ordinals is a protocol released in January that allows creation, transfer, and tracking of ownership or NFTs or so-called inscriptions totally on Bitcoin without relying on any sidechain or L2s or whatever. So, okay, that's cool, but what really excites us about Ordinals is that unlike any other chain out there, where you put a URL to the content of the NFT, here you can put the whole content on-chain for very cheap prices, and also that content stays there forever on the Bitcoin. So, yeah, that's what got us excited about Ordinals. As I said, NFTs started out Ordinals, then came some people experimenting, trying to do different stuff. So some people came up with fungible tokens called BRC20s, and that really took off Ordinals, right? After that, people started experimenting again, like trying to do liquidity mining, swapping, or lending and borrowing. So that got us questioning, okay, maybe programmability is a thing now with Ordinals. So that's why we think the end game for Ordinals is OrdFi, a new financial era on Bitcoin, new financial primitives built on Ordinals, built on Bitcoin without relying on any other sidechain or L2.
Yeah, huge room for growth. Bitcoin and NFTs on Bitcoin, it's like wow. Because Bitcoin is the most secure and the highest market cap blockchain in the world. And when we look at the volume on Ethereum, only last year-to-date volume is over $6 billion. And for the last 5 months, for the Ordinals, we have seen only $100 million. Keep in mind that this number is happened without any proper tooling and wallet solutions. Yeah, we believe that at least 60x growth is possible, but
that's not going to happen with improper, unreliable infrastructure or improper wallets. That's not going to happen with managing non-compatible Bitcoin and Ordinal addresses, going back and forth between those. It's not going to happen with unsecured private key storage. It's not going to happen with illegally forked wallet code from other chains. It's not going to happen with unreliable infrastructure. So we think that can only happen keeping these 5 things in mind. So that's why we designed and built Ordinal Safe with an easy UI, easy UX, one of the most easy to use wallets out there. It has to be open source. We were in beta, we were closed source. Today we are announcing that we are open sourcing our code because we believe in don't trust, verify. We also believe in no middlemen. I'm very sure everybody hates middlemen here. So that's why we're the only wallet that can provide trustless inscribing. Inscribing being here, creating an NFT. And also, as I mentioned before, it's not going to happen with unreliable infrastructure. While starting out Ordinal Safe, we realized that current infrastructure solutions, especially for UTXOs, was really unreliable. That's why we designed and built and are now using our in-house UTXO indexer. We are also creating an in-house inscriptions indexer as well. So these things won't happen with won't technically incapable team. So we're coming back to that in a bit.
Yeah, our vision with Ordinal Safe splits into two, user-centric and builder-centric. We built Ordinal Safe for degens, but we want to make it intuitive enough for grandmas. We know that crypto has a user experience problem. We want to solve in the long run this problem. And while solving our own problems during building Ordinal Safe, we came across, we see that there are other builders also need the same tools. So we want to provide the available tools for the other builders to build on top of Ordinals and Bitcoin. So like the San Francisco example, during Gold Rush, we like to sell shovels.
So let's get the users. As I mentioned before, we were closed source, we were in beta. And here's the thing, wallet game, you have to be everywhere. But it's also like a chicken and egg problem. To be everywhere, to get integrations, you get to have users. But to have users, you got to be open source, trusted, maybe to have trusted investors. And also, to get users, you got to have more integrations. So breaking out that loop is not really easy. That's why we are open sourcing our code. But still, being in beta and being closed source, we could see 45% growth for our weekly active user counts. Just like our vision, the revenue models for a wallet also split into two. On the one side, you have wallet user revenue models, and on the other side, you got infrastructure revenue models. For users, you could commission a bunch of different things, like in-wallet BRC20 swaps, or there are some really cool BRC20 operations that can make money for people that we think of, but we haven't really announced it yet. You can commission bridging, on-ramp, off-ramp. You can also commission inscribing without still being trustless. So on the other side, as I said, we got infrastructure revenue models. You can open up your UTXO API, which we also have institutional customers lined up for. We also people lined up for using our inscription API. And as a wallet also, you set up nodes, so you have your RPC API that you can open up to people and charge, of course. So all of these you can't really accomplish without a great team. So here's our team. I'm CEO of Ordinal Safe. I also do development with Orkun, Ekrem, and Talip. And maybe Murat can talk about himself a little bit.
Me, Murat, and Tuğçe, we deal with the business problems of the Ordinal Safe. Esat is being honest here. He came first in the first university entrance exam in Turkey out of 2 million students. And Ekrem and Talip, they had International Olympiad in Informatics medalists, which means like computer Olympians in the world. So we have very technically capable team. We believe in our product. We believe in our vision. And here at the Miami, we are looking for closing our seed run. If you are interested in Ordinals and Ordinal Safe, we will be here for the next 3 days. We like to talk and chat with you. Thank you. This is the end of our presentation. Have fun during at Bitcoin Miami.
Hello, just wondering, do you think the Unisat can be your competitors? How you think about that platform? And I do think the Ordinal ecosystem can be the future. So how you think about it?
So the question is that we have good competitors.
Whether Unisat can be your competitors?
Yeah, of course they are competitors, but I really don't want to I didn't want to give names here, but there are some problems with licensing issues there, and we think there's going to be big problems because they forked a known wallet's code, and yeah, that's it. So also, we don't really like how they do business in some ways. Like, they keep telling they have trustless inscribing, but basically you're sending some money to them, and maybe hope that they inscribe on your behalf. So that's why we started doing trustless inscribing.
Hello. Hey, this is Jason from Sora Ventures. So we actually used your app before, so it's very smooth. Really like it a lot. My question is, can you share a bit more strategies referring to how you guys are growing your users week over week? Now you saw the graph there, but there's actually no unit. So what are you guys doing here in order to scale? Are you competing from a user perspective, retailer, or are you working with marketplaces and other wallets in our ecosystem?
So yeah, we're close to 1,000 users now. As I said, being closed source and in beta was a little harsh on our using counts, of course. But yeah, we have seen rapid growth after we released trustless inscribing, and also people are now creating protocols on top of that called like BRC 721s, which has been getting us a lot of users lately. We think that when you provide builders new ways to do stuff, there are going to be new protocols that will get us new users. Yeah.
And we need trust. So like you keep your thousands of dollars on the wallet, so it has to be secure and trusted. So we need names and integrations. The more integrations and trusted names on our board, we will get more users. Yeah, like the ledger support, for example, this is one of the most asked feature. We are building on that.
On the way.
Like these examples will help us to grow in numbers, and we know that Unisat has a strong team. We like to compete with them in Asian market. So if you are investor from Asian market who will open up to expand in Asian countries, we like to chat also about that. Yeah, thank you.
What are the? Are we done, John? All good. Okay. What are the strategies you're using right now to acquire customers?
I didn't understand the question.
What are the strategies you're using to acquire customers?
Of course. As I said, we're trying to help out anyone that reaches out, like developers, builders. We are now in a DAO with some other builders for Ordinals. Our strategy is to like get integrations anywhere we can, so we can have more users.
Yeah. Up until now, we want to build the best product available on the market. Now we start to talk with other companies and integrations. This is like our first public appearance. From now on, we will have more integrations and companies working together. Thank you.
Thank you.
Thanks, guys. Good stuff. Next up, we've got Lava. We're filled up in here. We got some extra pressure. You ready to go, James?
Yep. Where's that? Is this the clicker? All right. Hey guys, my name is Shazan Muradia. I'm a co-founder of Lava.
Hey, and I'm James, another co-founder. So I guess first we wanted to sort of reveal our product today and sort of start off with the problem that we sort of see with the existing global financial system. So I think it's like no secret, particularly to people in this room, that like centralized intermediaries and the current status of the global financial system is quite complicated and sort of has a lot of these negative externalities. Sort of like a main one that we see is that it's like quite possible to confiscate people's funds and even lose it. We see sort of globally confiscation is a concern, but even like domestically, losing funds is something that you have to think about a lot. Additionally, there's like problems where you can restrict movement of funds, sort of exorbitant fees for movement of funds, particularly internationally. And we also see that you can, like, it's possible for banks today to manipulate users into sort of obscure contracts. We see that in lending a lot, where loans that are sort of indicated to be non-recourse are actually, in fact, recourse. And then sort of this last final important thing is that saving and investing is hard, and only the rich can really have great access to that. And the reason is that because you sort of need a large amount of capital and a large number of resources to effectively generate a return. So I think, like, as people in this space, we sort of like to point to self-custody, but the current solutions that we see are generally a little bit problematic. we sort of love Bitcoin wallets, and there's like a lot of great wallets out there right now, but I think people don't really want to deal with these user experiences in certain cases. Seed phrases are a little bit tricky to deal with, and UTXOs are complex to manage. It doesn't really resonate with the average end user. And additionally, there's certain things outside of the Bitcoin ecosystem that are valuable. I guess namely stablecoins and sort of more advanced smart contract functionality. But as soon as you sort of start to venture outside of the Bitcoin ecosystem, you're sort of like met with this onslaught of crypto trading, this sort of weird user experience that doesn't appeal to people that are just trying to save and have, I guess, sovereign wealth. Additionally, when you sort of go into this crypto ecosystem, you have to start worrying about these assets such as Solana and ETH sort of used as gas, and this is like simply just not ideal. Additionally, when you want to engage in DeFi, a lot of times if you want to use Bitcoin as collateral, you have to use a bridge or send it to a custodian, and this is highly problematic, as many bridges failed in 2022, and custodians failed as well. And I guess like the most salient observation that we can make is that like billions of dollars were lost using bridges, bridging collateral across chains, and at the same time, a custodian. So I'm going to hand this to Shashank.
So our goal at Lava is to empower people to have financial freedom, where we believe people should have sovereignty over their finances and also make finance so simple that people can have more freedom from finance. And today we're unveiling 2 products that we believe can help users more easily realize a financial experience that is sovereign and simple. So today we're unleashing the Lava wallet, which we believe is the future of finance and self-custody. Lava is simple, secure, and functional. We focus heavily on simplicity so users can effortlessly manage their financial needs in a simple and elegant user experience. Lava is secure, and we want to make the most premium security solutions accessible to everyone. We let people securely recover their wallet if they ever lose their phone by 2 methods, cloud recovery and physical recovery. Our cloud recovery solution, unlike other wallets, most protects the user from getting their seed compromised by using an advanced encryption scheme. We also let people set up physical recovery using a QR code, not just a seed phrase, so they can avoid certain accuracy errors that are caused by seed phrases. For users who want seed phrases, we still offer seed phrases. And Lava is also functional. We want to help people realize a sovereign financial experience that is also holistic. Using Lava, you can buy Bitcoin and stablecoins directly to self-custody. You can move them easily back to your bank account. You can transact with Bitcoin in a simplified user experience. You can also move stablecoins now on any chain. Right now we're supporting USDC without ever having to hold a native gas token like ETH or Solana. So it completely abstracts the complexities of using these other chains. And we let you borrow using the Lava Loans protocol in the most simple way to get Bitcoin-backed loans. The Lava Loans protocol is the safest way to borrow against Bitcoin. It is trust minimized, secure, accessible, and easy to use. We use invisible smart contracts on Bitcoin, otherwise known as DLCs, to facilitate the Lava Loans protocol. Using Lava, you can avoid rehypothecation and counterparty risk. You can have trust minimized loan initiation, loan repayment, loan liquidation, and expiration. Right now, if you are trying to use a borrowing product, you're either going to a company that's completely centralized, like Celsius or BlockFi, that you have to give complete trust to and that have lost billions in user funds just last year. Or you have to bridge your Bitcoin to another chain. Bridges are also trusted. Or you have to use a product that lets you hold one key, like Unchained or maybe Debifi, but those are also include trusted loan initiation, trusted loan repayment, and they're not as confiscation resistant as Lava. We think users should have cryptographic security that their loan process is going to be honored the way that they were told it would, and Lava enables that. Our goal is to onboard billions to self-custody and unlock the potential of Bitcoin as the best collateral for loans, giving people back control over their money, the ability to move money globally, permissionlessly, and all in a fast and simple UX. here's a demo of how quickly and fast you can make a loan process. In just about 20 seconds, you can create a loan request. Lava is available now. If you scan this QR code, you can access Lava. Cool.
Can you just give it a little bit more color on how the loans are originated and where the proceeds go? Like if I need dollars or euros, how do I get those and spend them? And then,
so if you borrow stablecoins on Lava, it gets deposited to your wallet. We let you easily off-ramp those stablecoins to your bank account if you want, using our off-ramp service too.
it's all stablecoins.
Right now, you're borrowing stablecoins, but the protocol is a generalized protocol to borrow assets on other chains against native layer 1 Bitcoin.
Got it.
Are you guys mostly targeting retails? Like, so as early as 2015, there are a lot of projects who does that, but they target mostly South America, where you're really just going for, less than $100. Are you guys mostly targeting that amount based on a demo, or can you do millions?
We can do millions. We work with miners and institutions who want to borrow. We offer a desktop interface for institutional clients for borrowing, but for our wallet, it's definitely more retail focused. But the Lava Loans protocol can provide institutional grade liquidity.
What are the stable coins that you're supporting right now?
Generally speaking, we're stablecoin agnostic, so our protocol works with any stablecoin on any chain that sort of has sufficient smart contract functionality. At present, we offer USDC on Solana, but this can easily be extended to Tether, Ethereum, etc.
All right, thanks, guys. Next up, we've got a pretty prolific entrepreneur in the space, Max, presenting Debifi. All right, Max.
Hey, I need this. Okay. Hello, everyone. Sorry for my voice. Like smoking kills. Yeah, my name is Max. I'm CEO of Debifi. Let's try this on. Yeah. Debifi is, first of all, I think that lending is hot again, which is good. But anyway, let's start. Debifi is a non-custodial global Bitcoin-backed lending platform for institutional lenders and all type of borrowers. Now, the borrowers on our platform will be able to borrow against Bitcoin by locking it into multi-signature account. And they will be able to do this globally from any lender available with the liquidity, and they will be able to interact directly with the lenders, and lenders will be able to directly interact with borrowers. Now, the current problem with the Bitcoin lending space is that it's highly centralized, mostly custodial. As a result, it's not transparent. As a result, there's a problem called rehypothecation. And as a result, because of the regulation, because of non-scalability of existing platforms, it's concentrated in certain markets, and we are about to change that, actually. Now, the solution to this problem is actually a global non-custodial lending platform where borrowers can lock their collateral in 3 out of 4 Bitcoin multisig, having full transparency, securing your loan collateral in the best possible way by using Bitcoin multi-signature accounts, and by borrowing globally among all the liquidity providers that are available there, if they're available in a certain market. Now, how does Debifi work? Every time the escrow is created on our platform, which basically contract created on the platform, we create a 3 out of 4 multi-signature account on public Bitcoin blockchain, where 4 keys are distributed equally among borrower, lender, Debifi, and 4th key holder. Now, the 4th key holder is a well-known independent Bitcoin company, actually several Bitcoin companies, which are going to use their key only in case of dispute or liquidation. Now, after the escrow is created, borrower sends the Bitcoin, It's locked in the collateral. Then the lender issues a loan, and after the time is passed, a borrower repays loan and receives his collateral back to his wallet. Now, actually, I wanted to present this slide without any comments because it's obvious and many people already show those companies here. But the problem is that we believe that there's a huge market opportunity at the moment because borrowers finally understand that earning yield on top of Bitcoin is kind of mental and reckless, risky, whatever, name it. And another thing, that there's a huge niche at the moment that we'll be able to fill in. Now, the market potential is actually pretty big because at the moment, crypto lending consists only for less than 1% of the total global lending market. It is expected that in next 7 years, the total global lending market will grow 4 times bigger. And we actually believe that Bitcoin is highly underrated among traditional financial institutions, and they don't understand yet that Bitcoin is a super collateral. Why? Because Bitcoin is highly liquid collateral. You can liquidate it 24/7, 365 days a year. It's a global, it's a digital, which means that you can issue loans remotely to any person in the world if you're allowed by your own regulation. It also means that Bitcoin is highly scarce, which is limited in supply and would only grow in the value over the course of the time. Now, borrowers do appreciate transparency of the Bitcoin and actually ownership properties of the Bitcoin. Bless you. Now, of course, we have a competition, but actually among all the competitors, Debifi will be the only platform that will have decentralized liquidity pool and a non-custodial approach. But it's not only about non-custodial approach. We will also be able to act as a technical tool providers, which means we're not middlemen, which means that institutional lenders will have full interest repayments from the borrowers. We will have a high scalability because, again, we are technical solution providers. We are not going to act as a centralized liquidity provider, which means we can move in any certain market in the world as long as there's liquidity provider with license and he's willing to start issuing loans against Bitcoin as collateral. Because of our unique multi-signature system, we'll also be able to introduce the API, which means that you will be able to build and integrate on top of Debifi and integrate it in any mobile wallet and platform out there. And another interesting thing, because of our setup, we will be finally able to introduce a unique thing that is non-existing at the moment in the Bitcoin lending space, which means secondary markets. Now, secondary market is a platform within platform, which will be able to help lenders to get a highly liquid collateral and resell and buy loans or loan portfolio from other lenders in our platform. This is something non-existent at the moment, and we have our own in-house developed technology to migrate those escrow solutions from one lender to another safely with no key exposure. Our business model is pretty simple. Obviously, origination fee, traditional liquidation fee, and also secondary market fee, which is a unique revenue stream which only we will have. Now, roadmap is that we're going to launch in Q3 this year with the full release coming Q1 2024. We're going to launch firstly with stable coins, then we're going to add fiat loans, and as the market matures, we're going to open secondary market at the end of the next year. Now, the team consists of 10 members, including me, and I have an extensive experience in building global non-custodial solutions, both lending solutions, trading solutions, and other types of non-custodial solutions. Our partners currently include several big names in the industry. Some of them are early backers, some of them will be Fort key holders, and some of them will be liquidity providers for our platform. Now, the MVP will be a mobile app and lending platform, which will work as a unique and one ecosystem. And our grand vision is that we actually want to onboard largest financial institutions to the Bitcoin standard, and we want to become a major global liquidity aggregator for Bitcoiners. Thank you very much.
I think everyone's probably dying to learn more about this secondary market opportunity. I think I'd love to hear what you've unlocked. I've thought this would emerge for years, but loans are hard. Institutional players don't seem to get the actual low risk with a Bitcoin-backed loan. And so what do you know that we don't?
Well, first of all, using Bitcoin as a collateral for the lender is actually win-win because it's always over-collateralized, and you will always receive your interest payment and the loan repayment fully. This is what we've been doing with our existing lending platform, which is Lend at HODL HODL. We have 100% retain rate. It was never liquidated with any losses for the lenders, so we have this mechanism in place. And actually, we use extensively our experience for our existing platform. But I think that, first of all, Debifi was expired because we've been approached by one of the largest Southeast Asian banks, and they asked, like, can we use your existing platform in order to start issuing loans, because they do understand the value of the Bitcoin as a collateral. So there's a lot of actually banks waking up towards Bitcoin in the world now, especially in light of the recent regulations like MiCA in European Union, what just was approved a couple of days ago. As a HODL CEO, I hate that regulation, but as a Debifi CEO, it actually helps us a lot because banks will now be able to play by the certain rules in European Union. So I think that it's just going to, more and more banks just going to understand that the Bitcoin is a super collateral. Crucial thing is, of course, education, but they start to waking up. And as soon as we will see Bitcoin up under, like, above 40,000, I think there will be a wave of them coming to the market. And they cannot develop their own technical solutions because they don't have any tools. And what we are trying to do, we want to offer them a solution where they will be able easily to onboard, whether they want to integrate it in their own interfaces, whether they want to use it on platform. But they have liquidity, we have technical tools and knowledge, and we will be able to match each other.
I have a follow-up question on the secondary market. So do you require any licenses depending on the jurisdiction once you get into that? And then also, have you ever considered a sliding scale on the percentage that you take on the secondary fee?
Well, we're just going to take the percentage if there's sell happening. So if there's one bank selling the loan portfolio or separately to another because they need liquidity or because they want to shut down the loan business, whatever. This is what actually banks do on a daily basis with other assets like real estate loan portfolios. One bank is leaving the market, another bank is entering, and they just resell the loan portfolio. They don't do this in Bitcoin because, as I mentioned, most, if even not every lending platform out there is actually centralized, and there's no reason for them to sell the loan portfolio to whom. They're basically the only centralized liquidity providers. So, yeah, I hopefully I answered your question. Thank you very much.
Thanks, Max. Next up, we have Nodeless, presented by UTXO. All right.
Good morning. So I'm UTXO. I'm the founder of Nodeless.io. Nodeless is a merchant acceptance platform that we allow anybody to accept Bitcoin payments without running a node. Anybody who has run a Lightning node knows that this is not the most friendly software for everyday businesses to be able to accept Lightning. So our mission is to make it as simple as possible while maintaining that Bitcoin standard of privacy and self-custody. So the issue that we have in the market today is, on one side, you have these KYC platforms. So this is like OpenNode, Coinbase Commerce, Binance Pay. The big problem with a lot of them is, number one, shitcoins. A lot of them don't offer any Lightning integration. So if you saw the mempool fees recently, this is kind of untenable for everyday payments. And a lot of them are doing data collection on you, submitting your on-chain transactions to chain analysis. So that's sort of the issue with the KYC platform. So if you go to the other side of the spectrum, you go full open source, DIY, self-custody, it's very difficult to set up. You need to have Linux experience. You need to be able to manage your Lightning liquidity. You have risk of permanent loss of your coins. If you don't back up your static channel backups, you can lose your coins. So it's pretty difficult if you want to do it the quote-unquote right way. So what Nodeless is trying to do is be that in-between, where how can we make it easy but still maintain the user's privacy, still make it simple and uncensorable. So we do this by essentially being a Lightning router on behalf of our clients. So if you're an e-commerce store, you receive a payment, we immediately send it to your custody through Lightning. So we don't have to custody your coins. We don't do any KYC. We're Bitcoin only. And in fact, I should probably change that to Satoshi only, given all these, we're never going to do BRC stuff or stable coins. We only use Satoshis. That's the native unit of our business. We're highly privacy focused. So even if, for whatever reason, let's say somebody hacked into our systems, we don't have any coins or any data to even leak about our clients. We integrate with the biggest common platforms that are open source. So take WordPress, WooCommerce, PrestaShop. And we also have an extremely powerful API for developers to work off of our platform for the more advanced use cases. So as I mentioned, we are promoting self-custody. So as payments flow into your account, they immediately flow back out into your Lightning address. So we're offering these anonymous payments. As a just quick example of how seriously we take privacy, we don't even have any analytics, Google Analytics, or anything on our software. We actively make that trade-off that, okay, we might not understand how well our marketing campaigns are working on one end, but on the other hand, we haven't put any tracking software on our clients' computers, and we will always focus on that trade-off, on privacy and self-custody. So what's the opportunity here? I think it's pretty obvious that e-commerce just grows bigger and bigger every single year. Several of the reports I'm reading is in the next couple of years, we'll see between $7 and $8 trillion worth of payment volume going through e-commerce. If we take a relatively conservative estimate over the next couple of years, Bitcoin could take up to 2% of that. In some of my other businesses, I'm seeing upwards of 5 to 7% of all payments are going through Bitcoin. But let's say it's just 2%. Our business could be capturing, between $1.5 to $3 billion worth of volume within the next 2 years. So some of our features, if you don't run an e-commerce store, we also have some other products that might be interesting for you. So just as a quick example, everybody knows you can't put your email address on the internet, otherwise you'll get spammed. So we have something called the Nodeless address, which is effectively a paywalled email. So put your email everywhere you want, and the only emails that get delivered to you are the ones where people have paid you Bitcoin. We do e-commerce pages, donation pages. So same thing, if you're a content creator and you want to have a static page to collect donations off your Twitter profile, for example, we can set that up for you. We have a paywall content module, so if you run a WordPress blog and you want people to pay per article, we have a very simple integration for that. And as I mentioned, we do the automated withdrawals, and all of these features have a very powerful API to go with it. So a bit on our roadmap. For the last year, we've been building the product, not only the actual product that people use, but also open source software development kits for developers to get started. We have over 5 different SDKs already available on GitHub. We recently launched our beta, so we're about 12 weeks in right now. We're refining the product, getting user feedback, and it's been great. We're up to over 300 clients already in just 12 weeks. So our next step, what we're looking to do, now that we sort of see that the product has good fit and people like it, is just sort of scaling up our sales and marketing. We're increasing the amount of platform integrations we do. So as I mentioned right now, we do WordPress, and we're working on PrestaShops, and we're going to have more coming in, such as like Salesforce. We're also working on a point-of-sale open source app that will work with both Nodeless and BTC Pay Server. It's important to note that Nodeless is good, but BTC Pay Server is the best. So if you can run BTC Pay Server, you always should. But if it's a little too difficult for you, Nodeless is trying to be like the next best thing. So assuming all goes well, our next steps with Nodeless will be to harden our security a little bit more and look at moving the company to a very friendly jurisdiction that will be happy to host our business versus, Canada, for example. A bit about our team. So I'm UTXO. I'm an AI founder. That's how we're bootstrapping this business. Own another business with over 1.4 million users. I've been working on BTC Pay Server and LND SDK development for the last 2 years. I'm also the ex-head of digital merchant acquisition at American Express. I also have Pavel in the room here. He was the founder of the first Lightning exchange in Canada. And then Ndeet, who is a core BTC Pay Server developer. I've been working with him for years. Much better developer than me. And he's on the team. So very excited about our Bitcoin-only team. And that's it. Thanks, everyone.
Hello, here is a question. So just wondering that you mentioned you will protect the user's privacy.
Yes.
So what's the strategy you use, and also how you can accept the KYC and also protect the user's privacy in the future?
So we don't do any KYC. We never ask for any personal information. In fact, when you sign up for Nodeless, you don't even need to give us a real email. You can give us a fake one, and we don't even validate it. It is your choice. If you don't want us to send you emails, you don't want to give us an email, you don't have to. Just like, when you set up a Bitcoin wallet, nobody asks you for your information. No one asks you for your email. So we're trying to be as close to that as possible. When it comes to any information that could potentially be sensitive, that's all encrypted on the database side. So even if someone happened to steal our database, if they don't have the decryption key, they can't read any of the data.
Just a following question. So this can use in some other countries, such as Asia or US, they have the highly restriction for the crypto.
Yeah, well, I mean, when Satoshi built Bitcoin, I highly doubt that he had compliance as a moat, as a business strategy. So we're trying to stay within that sort of frame. If the U.S. or some other country is not happy with our business, then we are just going to move to a business or to a country like El Salvador or Dubai, somewhere that is friendly and wants our business. We don't want to have to fight with regulators. That's not a battle we're interested in having. Sure.
So I love the vision for where you're headed with it, but we do live in a world where regulators exist. Even in regulatory-friendly jurisdictions, there's anti-money laundering and KYC type information that's needed. So what prevents, even in a regulatory-friendly jurisdiction, somebody coming in and saying, if you're collecting no information but you're moving around all this value, we need to know something that's going on. Why would they just shut you down?
Sure. Well, there's a couple things we do to try to fly under the radar a little bit. So we don't process any transactions over $10,000, as one quick example. But we do anticipate that might be possible. And if that does happen, if it so happens that this business is untenable and we're just being fought all over the place, then I'm just going to open source it, shut it down, and let thousands of people run their own Nodeless. So we're more interested in advancing this for Bitcoin. This is less about us building a multi-billion-dollar company. This is how do we make Bitcoin a true medium of exchange. So that's really our goal here. We're going to try. I don't know what kind of things are coming from different governments around the world. We'll roll with the punches, but we're unwavering in this vision. Thank you.
Thank you. That was Nodeless. They were our last competitor in the infrastructure section. So what's happening next here is our judges will come backstage, deliberate for about 5 minutes. and then we're going to come out and announce the winner of this section. In the meantime, Tyler Evans from UTXO Management is going to come out and talk a little bit about UTXO Management and how they're thinking about investing in Bitcoin startups, presenting sponsor of the enterprise stage here. So judges, if you can follow me backstage, and we'll be right back out in the next 5 minutes or so with the winners.
Hello, hello. My name's Tyler Evans, and I am your halftime entertainment. I am one of the partners of UTXO Management. I'm one of the co-founders of BTC Inc., which is publisher of Bitcoin Magazine and host of this conference. UTXO Management is our asset management arm, where we are actively investing, deploying, educating, focus on all the opportunities really for capital allocation within the Bitcoin space. So I'm going to be giving a talk at 1:30 with a couple of our other partners, talking about kind of the Bitcoin investing landscape as we view it. We come at it from a couple different angles, where we have a hedge fund focus on liquid opportunities and helping investors, family offices, pensions, institutions just get exposure to Bitcoin as an asset class, understand the role it can play in their portfolio, and make the case for Bitcoin to their investment committee. And then what I've been spending on my time on, which is even more exciting and fun to me, is focus on working with entrepreneurs and finding the next generation of Bitcoin startups that are going to help make this technology easier to use, more scalable, more private, and accessible to more people all around the world. And so we've got what we're calling the Bitcoin Ecosystem Fund, where our thesis is really that the first decade of Bitcoin was one that was very kind of capital intensive, focused on mining, on exchanges and on-ramps, focused on hardware, on infrastructure. And now we all get to take advantage of that decade of both investment and building that have built this foundation for a payments network, a store of value that we all can use and trust and rely on. And we're looking ahead to the next decade of Bitcoin development. We see a massive opportunity for really software businesses, for people to be able to build hyper-scalable software businesses that leverage all this infrastructure, all this hard work that's been built over the past decade to build layer 2s, to build Lightning, to build Fediments, to build things using ordinals, inscriptions, roll-up, ZK proofs that make this technology accessible to more people and really that open up entire new use cases on top of Bitcoin. So we're really excited about some of the startups coming to present here. We're actively looking for the best builders in Bitcoin. And so if you're building something innovative on Bitcoin, please come find me. I'd love to chat. If you're an investor looking at ways to deploy capital in this ecosystem, or you want to meet startups doing cool stuff on Bitcoin, come find me. Would love to have a conversation. So thank you. I'm going to go check in on our judges, and they'll be back with our winner shortly.
We are coming back on stage to present the winners of the infrastructure section. We have two prizes for the infrastructure section. One presented by Unchained is going to be kind of our runner-up prize, and then a first place prize presented by Bitcoin Magazine, with Unchained providing a nice package for that winner, and Bitcoin Magazine providing a nice package for the overall winner. So if the judges could join me up on stage. And we will get to our winners. Jason, if you want to come up too. So the Unchained prize, Jason, I'll let you take that.
The second place goes to Ordinal Safe. they come up.
Yeah. Let's get a photo here. All the judges.
Thanks. Thanks.
Thank you.
Congratulations.
Thank you. Yeah, I'll go on this side.
All right, yeah. Thank you. Just give a nice photo moment here. All right, cool. All right, cool. And then, Chris, if you want to take away for our winner.
Hey, congrats.
We had some very high-level deliberations. We loved all the lending stuff today. I think there was one thing for the first place winner that stood out to us, and that was one of the key unlocks in credit markets that are Bitcoin-derived in a sustainable future are institutional players that actually will buy originated loans by Bitcoin companies. And it sounds like Debifi has a solution for that in the next 18 months or so. So first place goes to Debifi.
Thank you very much. Thank you, guys. Thank you.
Thank you. Just get one photo here.
Where's the camera? Oh, here it is.
Good. All right. Good job, Max.
Thank you very much.
Thank you, sir.
Thank you.
Cool. All right. Debifi, the overall winner there of the infrastructure section.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.